single sheet of paper, and they disappeared. They don't look like the handouts that everyone else has. Did someone pick them up? Okay, perhaps not. So we will. Yes, you may. Thank you all for coming. We are overwhelmed with turnout. We're happy you're here, happy you're interested, and this is about finding a way forward for the Clifton market, the site, and so forth. So first off, I'd like to introduce myself and the board. I'm Bruce Alt. I'm the Vice President of the Board of Directors for Clifton Market. Other board members who are here tonight are Ed Spinkick, Emma, Alex, Carol, Sean, Larry, and Tom. They have all been working, I think, very hard trying to find solutions and pathways for all of you to consider. I will also note that there are two board members who are not here tonight, the President, Gary, and Paul Calamaris. Paul was usually our tech guy, which is why the absentee ballots aren't out yet. But he's driving in from the north, and he's run into snow, and he's delayed, but he will be getting here later. Gary and Jeanette Singh are board members, but both have recused themselves throughout the fall as we've discussed this because of conflicts of interest or perceived conflicts of interest. So the 9 of us have been addressing everything that we can on this. So today is our focus on moving forward in whatever direction. In the end, all of you as shareholders express your preference for doing. So in a minute, I'm going to turn the microphone over to the lawyer that we retained, Eric Goering, to go through a number of items and our options for you to consider. But before I do that, I wanted to say a little bit about the voting process. After we finish our discussion tonight, or are well into it, we all want you to express your preference by either an in-person or an absentee ballot. Since you're here, in-person might be the way to go. The in-person voting is going to start at 7:30 this evening in the room back in the front right of this building, back behind there, so that if those people who feel they have to leave before the discussion is over, or they feel like they've heard enough to make an informed decision, that you can begin voting as early as 7:30. If the discussion is continuing beyond that, you can wait, continue the discussion, and vote after that. Also, there will be in-person voting tomorrow from 4 to 7 at Clifton Market for people who don't want to stand in what might be a bit of a line tonight. But that will be available, and we'll have that set up at 4 o'clock at the market until 7. I want to remind you that for in-person voting tonight or tomorrow, we are requiring a photo ID from each individual to match the name on our official rolls. Every shareholder who has a registered email address with the Clifton Market, usually when you bought your shares, and hopefully you've been getting the emails because you're all here now, you will be getting also an absentee ballot in the mail as soon as Paul gets back into town and can take care of that, which will be later this evening. Obviously, you can't vote in person and absentee both, but we certainly will be checking off to make sure that each person votes at most one time. The absentee ballots will be in the email along with a set of instructions on how to print out, sign, and get that back to us at info@cliftonmarket.com. And the deadline for absentee voting we've set as 9 o'clock Thursday evening. So in person if you're here, and that's fine. We encourage that. If not, absentee before 9 o'clock Thursday evening. One thing that happened, I understand in June, I wasn't involved then, but I understand it happened, is that some people printed out their absentee ballot and dropped it into the in-person voting box at the market, which you, in theory, could do tomorrow. We ask you not to do that. The identification methods for in-person and electronic voting are different, so that if you choose to vote the absentee ballot, you need to return it by email to us. If you choose to do it in person, it's a slightly different identification method, i.e. photo ID, which you will do back in the voting room. So that's enough of the information on voting. We hope everyone participates. That's what democracy in this group is all about. At this point, you've seen the emails pertaining to the market, its finances, and like as this board, who was, 6 of us were elected in late June, started working in July, learning about the market, we came to realize how difficult the financial situation was. At that point, we met with and then retained Eric Goering, a lawyer who specializes in the situations that we're dealing with, and he has been guiding us and advising us on ways forward. So at this point, I'm going to turn over the microphone to Eric to talk about his analysis and the options that are for you. Then we will invite the proposers of the two main proposals, options 1 and option 2, on your ballot to speak if they wish to, and then we will entertain questions and comments from the audience and keep that going until we're either out of questions and comments or we are redundant and repeating and so forth. We are going to ask that your questions or comments be limited to 2 minutes in duration. Ed is going to be doing the timing of that, but we want to keep this orderly and give everyone an opportunity to speak if they choose to. So with that, Eric.
Good evening, everyone.
Good evening.
My name is Eric Goering. I am an attorney downtown with the law firm of Goering & Goering. I specialize in restructuring, financial, and bankruptcy issues. I'm also a bankruptcy trustee appointed through the U.S. Department of Justice to hear bankruptcy cases and to administer the assets. I've been retained by the board to help them review the finances of the market and to help investigate alternatives so that as a body you can vote as to where to move forward. So my plan today is 3 parts. First, I want to do an asset summary, and that is I want to lay out for the group what are the assets and liabilities of Clifton Cooperative. Then I'm going to give a financial summary where I'm going to go over some of the numbers as of the August 31st financial statement. And then we're going to review a couple different alternatives so that you can make an informed decision when you vote. So to start off with, we're going to look at the asset summary. So if you look on the board, I've broken out for everyone the property and the 3 different mortgages which are secured against the property. In order to advise the board as to the best course, I felt it was necessary that we secure an appraisal of the property so that we know what we're talking about. It's the board's fiduciary responsibility to sell assets for close to fair market value as they work through the problems. And so we hired Beck Consulting to appraise the property, and I have a 96-page appraisal which said the property is worth $2,576,000. An appraisal is what it is. Is that the actual value? Well, it's worth what you can get for it. This property has not been subjected to the market. I talked to the board about reaching out to investors or different groups, but as of now, they've decided not to follow that course of action, and they are prepared to present a couple different options today. One of them is to try to sell it and subject it to the open market and see what kind of building would be built on that site. So there are 3 different mortgages of record against the property. If you look, the first one is with NCB with a balance of $1,817,000. The second is Shared Capital Corp for $951,000. And the third is a personal mortgage by a gentleman by the name of Bob Bergstein, and he has a mortgage for $233,000. All 3 of those are filed with the county recorder's office and secured against the property, and I put all the information on this summary. So the total debt against the building is in excess of $3.1 million. And so it's underwater. And so on a liquidation, if we were able to sell it for fair value, it would have to be a short sale. Can you scroll down?
Yep.
So what other assets does the market have? Well, they have some different equipment located at the market. We estimated the value of approximately $50,000. In order to secure collateral, you need to file what's called a Uniform Commercial Code Security Agreement with the Secretary of State, and based upon the priority of those filings, dictates who's in what place. And so while NCB is first on the mortgage, they have agreed with the second mortgage, Shared Capital, who I call SCC, that SCC can have the first priority against the equipment. NCB does have a second against equipment. Now, the equipment's worth $50,000 maybe, and the 2 mortgages are $2.8 million, so there's nowhere near enough collateral to cover the debt. The remaining assets, keep scrolling, there's a point of sale system, which Navient has a purchase money security interest in. They have filed a UCC on January 18th of 17. They're owed approximately $56,000. Maybe the POS is worth 10 grand. That's just an estimated value as of now. There's miscellaneous kitchen equipment that Consolidated Food has a lien against. There's a Crown lift truck that has been paid off. So on a liquidation, maybe there's $500 in order to secure the debt above the value of the real estate. In terms of the liabilities of the co-op, Laurel Foods is owed approximately $1,124,000. They do have a UCC lien, but in my opinion, there's nothing for that lien to attach to, so I call them an unsecured creditor. There's personal investments into the market of $1,380,000, and another list of accounts payable of miscellaneous vendors of $185,000. So, in terms of a liquidation, it's 0. So, that is the asset summary. So now let's go to the financial summary. If you click on the financial statement, see, P&L.
Let's see what orientation comes up.
So go to rotate, it's counterclockwise. So I'm showing you 2 pages of a consolidated financial statement which summarizes the business of the market as of August 31st of 2018. Where I want to focus your attention, if you look over to the 6th column, it has a prior 5-month average as to business at the market.
Sir, we magnify it.
Can you
Really
keep
sure.
focus? Go for 78, number 3.
Yeah, I'm gonna go up.
Go over.
Just go over. Tell me where to go over, and I'll get there.
Yeah, keep going. Go to the 5 month, and then can you go up a little bit? Here, make it
Yeah.
large. Make it big.
Yeah, I'm going to. Yeah.
Yeah, that's good enough. Can you go down just a little bit?
Yep.
So the 5 months through August 31st, 2018, the gross total sales of the market was $2,433,000. The cost of goods sold at the market was $1,860,000, which left $573,000 for operations. The operation expenses over that time period was $761,000, which left a negative net to the market in those 5 months of $187,992,000. If you take that and break it down by 5 months, over that period, the market lost $37,598 per month average. And so when I'm retained to analyze businesses to present options, the first question I ask myself, and the overriding question in the analysis, is what is there to save? You know, other than a market that services the neighborhood, if the numbers don't work on paper, they don't work in reality. And this business is losing in excess of $35,000 a month. And so, can the market be saved? $37,000 a month is a big nut to fix, especially when your sales are about 585, about 500. Yeah, when you have sales of groceries of about $100,000 a month. So, from a strict financial analysis, this doesn't work. And unfortunately, it hasn't worked for a long time. As you're looking at my prior summary, there was a note on there that Laurel Foods has an account payable of $1,124,000. Well, basically Laurel Foods has been keeping the market open for about a year. And what they've done is they've sold groceries to the market on credit, and they haven't been paid. Now, for a while they've been on COD, and things have been, and the board has tried to work with Laurel Foods in order to keep the shelf stocked, but as everyone is well aware, they aren't very stocked, and the reason they aren't stocked is because there's no money to buy groceries. And so, from a strict numbers standpoint, major adjustments need to be made if this is going to be profitable. So now I want to go to the options, and we made a copy for most people, and we only made 125, so I apologize for those that don't have them, but we will put them on the screen. And so what the board did with my assistance is they tried to talk to the different parties in the community to see who was interested in assisting in trying to analyze the options. I have been in communications with all three of the secured creditors, NCB, SCC, and Mr. Bergstein's counsel, and they know that we are trying to work towards a solution. They knew that there was a meeting today, and they are interested in how everyone decides to proceed. So let me explain from a legal standpoint how things work. Right now, we are 2 months behind on the first mortgage and about the same on the second mortgage. We have received default notices from both mortgages, and at any time they can proceed with filing a foreclosure in Hamilton County to take the building back. A normal foreclosure in Hamilton County takes somewhere between 4 to 8 months. With some good lawyering, you can drag that out to 12 or 16 months or 2 years. But most likely they're going to put this in foreclosure sometime soon and ask that a receiver get appointed over the property and ask for the receiver to sell the property. Now, if they bring a receiver in, it's going to shut down the store. From a financial standpoint, the store can't operate, and so right now the market is within weeks of closing. So let me go through what options exist. And feel free to ask questions. I'm happy to answer questions throughout this process so everyone can make an honest and informed vote. So the first option is what we're going to call the sing-off. And Mr. Singh's here today, and he is going to chat about what he's done and his interest in the market. But I have 2 different offers from Mr. Singh, one to buy the building and 2 to buy the assets. And we have the offer broken into 2 because the building offer has to go to all 3 lenders, and the asset offer needs to start at the second lender, so he broke it into 2. And the total offer to purchase the building was $1,725,000, and the offer to purchase the assets is $75,000. Now, out of that money, I will need to do what's called carve-outs. And I've already started communications with the lenders, and why they never like to hear from me, they are certainly open to discussions, but they want cash, and they want it now. We're not going to do a short sale saying we're going to ask you to take a $300,000 haircut 12 months from now. Time is of the essence. And so the banks are interested in proof of funds, and they want to make sure Mr. Singh is going to close. I've been communicating with Mr. Singh's counsel about this. I'm being told they are fully prepared to move forward. A carve-out. A carve-out is where you ask one creditor to take less so you can throw it to another. And so out of this deal, the idea would be that we would go to the second mortgage holder and ask them to take $75,000 and release their mortgage, their $1 million debt. The plan then would be to go to the third lien holder and offer him a nominal amount to release his $233,000 mortgage. And those carve-outs are all going to come from NCB's money. And so the idea would be to do a carve-out for the second, a carve-out for the third, and let the first mortgage holder have all the remaining net proceeds and release their mortgages. Now, we're not asking for them to forgive the debt because, I mean, we will ask, but it's a distinction without a difference because there are no personal guarantees on this obligation. So at the end of the day, they're only going to receive whatever they receive out of closing, and that will be the end of it. Now, we will have to get some money to pay the accountant to file the final tax returns, and of course get some money to pay all the lawyers, and we're gonna cover the professional expenses, but none of the unsecured will receive any money, and none of the investors or shareholders will receive any money. So you may be asking yourself, why would the second mortgage company take a haircut and walk away from $975,000? Well, the reason is because the alternative to them is even worse. And that is, if this does go in foreclosure, they start selling foreclosure property under state law at 2/3 of the appraised value. So our appraiser said 2.5, but that was with an open market there. If the place is closed, deserted, vacant, hopefully not vandalized, the value is going to diminish quickly. And so so even if it is worth $2.5 million, if foreclosure starting at 2/3 of the appraised value, there's barely enough to pay the first mortgage. There'll be nothing for the second and nothing for the third, and they won't receive their nothing until at least a year from now, because that's how long it'll take to foreclose. So there is an intrinsic value to each of these secured lenders to play nice and work with us and try to come to some type of agreement to maximize everyone's recovery. So that's what we call option 1.
Question?
Yes?
Yes. When you are mentioning these carve-outs, do you have agreements from the 3 groups that they would accept such a carve-out, or is this hypothesized?
So that's a good question. The discussions have occurred. They want the details of when. They want the money. And so if Mr. Singh is ready to proceed, has the funding, and we can close by the end of the year, all 3 have told me they're willing to discuss. Now, I couldn't get any commitments before I came in here today because they don't like to hypothesize either. They want a solid offer to know when, because they have to take it to their board for approval also, and we don't like to deal in what ifs. Yes?
Once the carve-out is finished, we have an unsecured creditor, the law includes, what happens at that point? Do we still declare bankruptcy within the co-op, or how does that work?
It just hangs out there. It's an unsecured debt. If you were talking to me personally about this situation, I would tell you they're going to send you a 1099-C for cancellation of debt, and you have to claim it as imputed income. So if they want a 1099 the co-op, be my guest, we're insolvent, we can claim the insolvency exception under the IRS statute. I'm not a tax lawyer. I know enough about it to make me dangerous. We will certainly have an accountant involved who will be part of the carve-out, who will file the final tax returns and address these issues. But the simple answer is they don't get paid.
The cooperative then ceases operations. There is no cooperative operations at that point for the next year.
Yes, that's correct. And there's no one to collect against. It's what we call letting it die on the vine.
Question here.
Yep.
If the owners vote for option 1, if that ends up to be the vote, and Mr. and Mrs. Singh decide after 45 days of the management agreement that they've changed their mind, which seems their right to do, or if they are unable to secure the money that is needed, then what happens? Do we come back and revote? Does it go directly into bankruptcy? If we all vote for this and it doesn't work out, what's the next step?
So you raised a couple issues, so I'm going to give you a long-winded answer. So first of all, you mentioned the management agreement. So I apologize that I skipped over that. So Mr. Singh has been in the store operating it under a management agreement for approximately 2 weeks now. The management agreement does not bind the cooperative. It says that the cooperative may sell him the market, and that's what we're about to decide with this vote. To answer your question, what I'm really looking for is direction from the co-op. If the vote is pursue the Singh deal, and for some reason the Singhs can't receive financing, then we're back here again, but that's one less option. We're at least a month or 2 past further behind, and we're probably in a foreclosure. But, is bankruptcy an option? Bankruptcy is always an option. So this is a little out of order, but let me just talk through what bankruptcy is and the types of bankruptcy. So we're going to focus mainly on 2 types of bankruptcy. The first is what's called Chapter 7. Chapter 7 is a full bankruptcy. Once every 8 years, you can ask court to discharge your bills. They put them behind you and you start over again. In a Chapter 7, you discharge all your liabilities. A trustee is appointed. There are 10 different trustees in Cincinnati, and the trustee's responsibility is to liquidate all the assets, create a pool of money, and pay it out to the creditors. There are no assets in the co-op that have any equity in them because the mortgages eat up the equity in the building. So likely in a bankruptcy, it would be a no asset case. All the debts are discharged and the bank forecloses and takes the property back. There is no reason that I see for the co-op to file a Chapter 7 bankruptcy. The second option is to do a Chapter 11. Everyone's heard of Chapter 11. Delta, Enron, Chrysler. Chapter 11 is very involved, very complicated, and super, 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 super expensive. You're talking a retainer of somewhere around $100,000 to $125,000, and I promise you the fees will exceed that number. As I stated earlier in my financial part of this, when a company comes to talk to me about a Chapter 11, the same overriding question is there. What is there to save? Because in a Chapter 11, a corporation has great power. First of all, they can reduce all their debt to the value of the collateral. So if the building is worth $2.5 million, we can write $3 million of mortgages down to $2.5 million. We can propose to re-amortize the debt over 20 to 25 years at a till interest rate of probably 6% and refinance the whole package. The problem is, you got to be making money. Who's going to pay the mortgage? Who's going to continue the debt service? What are we trying to save? And so, as soon as I reviewed the financial statements, it became clear to me that under the current status of the business model that's in place, it doesn't work. And so, first of all, you don't have money to hire a lawyer to do a Chapter 11, and second, it ain't going to work. So it's not a good option unless there's a way to increase sales by, you probably need about probably about $100,000 a month additional sales, maybe to break even. So, to answer your question, if the Singhs are unable to secure financing or don't close, then we're kind of back to the drawing board. So what I've been trying to negotiate in the background of this is how long do the Singhs have? And because that's critical to the lenders. The hope would be that we would close within 60 days on a sale, but your vote, if you vote for option 1, is to authorize me to move forward with negotiations, planning to make a deal, and authorizing this board to approve a deal. Now, look, co-op law is its own little world. I am by no means a co-op expert. I didn't even know there was an Ohio Revised Code on co-op. So the lawyer who drew up your co-op documents is in Vermont, so that gives you a general idea. With all the lawyers in town, they had to go to Vermont. So exactly what would be necessary to consummate a sale and what kind of approval we need is still a question that's lingering. Perhaps you all get to come back and vote again to authorize the board to sign the papers to transfer a deed. That's something that we can deal with down the road. But your vote for option 1 today is to tell the board to tell me to try to put together a deal, work the carve-outs, and try to get everyone in line. Yep.
So, as you just described, our option 3, were we to choose that, is not the same as declaring either Chapter 7 or 11 bankruptcy.
That's correct.
Not the same thing.
And I'll talk more about option 3 here in a moment.
Okay, thank you.
Anything else on 1? Yes.
So in option 1, will the market stay open or close?
So the sorry, I should repeat questions for that. So the question is, under option 1, what happens to the market? I am not going to speak for Mr. Singh, so when he has a chance to come and discuss his plans, I will let him address that issue. Yes?
So, could you explain, if you were involved, what exactly the management contract the Singh signed implies for the health of the market and the current health of the market? Because you made mention that in 2 weeks the market would close its doors, and I was given to understand that it almost closed its doors 2 weeks ago. So could you kind of put that in context, how the Singhs came to be involved in this management contract?
Yes. So the Singhs came to the board multiple weeks ago with the proposal. So we started negotiating with their lawyer, and they put some agreements together. It was clear that the board was not going to be able to keep the market open during the negotiation process to bring us up to today for this group to vote. So I will say, out of the goodness of his heart, Mr. Singh proposed a management agreement where he would come in and run the market. He's going to put some of his own money in, understanding that there was no guarantee that he was going to be the winning bidder, because he wanted to have the market open in order to maintain the value in hope that he would be the winning bidder, or the winning, that's not the target yet. In terms of if we close in 2 weeks, I think I was referring if we don't do anything and Mr. Singh walks out of this thing, we're closed in under 2 weeks because we have no money. We can't stock the shelves. We can't pay our employees. And what I'm not going to let the board do is fail to pay what's called trust fund taxes. So let me now go to that, because I'm sure in the back of your mind, I'll be right with you. Everyone in this room is wondering, there's going to be about $1 million shortfall in the liquidation. Are we each going to get a bill? Yeah, we are. No. So the co-op is the borrower. The co-op is the one liable. I've advised the board that as long as they do what I call their fiduciary obligation, which is to look at the options, have an appraisal, make an informed decision, that they are protected. What they're not protected against is what's called trust fund liability. So when you're an employer, you have the pleasure of withholding from your employees federal withholding tax. We call them 941 taxes. So your paycheck's $1,000, you get a check for $750 because they take $250 out and hold it for the government. The corporation also has the pleasure of doing what's called a corporate matching share. So not only if you have an employee, you get to withhold $250 from their paycheck, but you have to pay $250 of your own dollars to match it and send to the government. The amount that you withhold from your employees is what's called a trust fund obligation. When you go buy your groceries, they add sales tax on it. The co-op is withholding the money from the sale of the goods in trust for the state of Ohio to cover the sales tax. It's a trust fund taxes. Trust fund taxes are a personal obligation. In a normal corporation, they are personal to the officers and directors. I am not going to tell you exactly what co-op law says. Here's what I am going to tell you. The board is very clear that all trust fund taxes have to be paid, and if they aren't going to be paid, we will close the doors. So I'm not going to go into a legal opinion now as to who's liable for trust fund taxes. What I will tell you is it's normally the individual who has control of the money, signs the check, chooses not to pay the trust fund tax. Yes?
So we can understand what kind of burden this was saying would be under. Do the Laurel Foods and other liabilities go away with this purchase?
So this is an asset purchase and a sale of the real estate. So Mr. Singh would create a new corporation and he would buy the market and the assets. Laurel Foods is a debt of the co-op. It will remain at the co-op. As to what deal he has with Laurel to move forward, I will let him address that question. But to get to your point, yes, this co-op closes under the Singh sale. You sell a majority of your assets, and there's nothing left except debt, and so the co-op would be closed, dissolved, whatever the proper legal term is, to wind things up. Anyone else on option one? Yes?
And then he has a question as well.
Okay.
So I have two questions. Question number one is, I'm assuming there's commercial liability insurance, like D&O insurance that cover the board.
Not on withholding taxes.
Okay. Didn't like that answer. The second one is, it's not personal. The $75,000 that Mr. Singh invested according to the letter that was in the packet, that is of his own doing. So even if it's under any of these options, he's not reimbursed that $75,000?
There's nothing to reimburse him with.
Right.
Yeah.
I just,
Correct. Oh, wait. Oh, here, sorry.
You skipped really fast from the trust fund stuff back to option one.
Okay.
I don't recall seeing on your finance sheet a report that, told us the amount that we're obligated to the trust fund. What do we have in assets and what are we obligated to pay at this point?
Are you asking me what are the current accounts payable?
What are they to the trust fund?
Trust fund, yeah.
I don't remember seeing that anywhere on your list of the financials.
So as of now, from what I've been told from the board, we are current on all of all the trust fund obligations. That payroll, so you use a payroll company, and the payroll company takes the money and pays the 941 taxes out of that. So you're right, it's not on any of my sheets because the board has been telling me it was an early discussion in our first meeting, and they have continuously told me the same thing, and that is we're current on sales tax and withholding taxes, except for you pay a week or two behind. But there's no arrearage, I have been told.
Thank you.
Yep. Who did I skip? There, young lady. So the question was, some people are shareholders, some people have given loans, that is it fair that someone who owns a share, but only a share, gets the same vote as someone who owns a share and gave a loan? Did I word that correctly? All right, so if you read the co-op documents, it's one share, one vote.
One shareholder, one vote.
One shareholder, one vote.
Yeah.
The loan isn't in play because you're just an unsecured creditor. You're just like Laurel, who's owed $1 million. They don't even get to vote. So any creditor is not part of the discussion. And so to answer your question, what binds this group is the co-op constitution or shareholder agreement. It was all in the documents that were initiated when this started, when you paid your money, and when you bought your share, as to how your vote is counted. Yes?
When you spoke, you talked about the Singhs having 60 days for critical funds. Is that the appropriate terminology?
No. If we're going to move forward with the Singh offer, I'm going to push and need proof of funds probably within 10 days, and I've been told that I can have it if they're approved, and then I want to close in 60 days. This sale needs to be consummated, I hope by the end of the year, so we didn't have to pay the accountant for next year's taxes, but that's a pipe dream at this point.
So
option 1. I have to hit 2 and 3, but that's okay. I'm happy to do this. I want to give a big picture summary so that when you answer questions, you can try to distinguish option 1, 2, and 3. Yes, in the back.
Hi, I'm just late to the meeting, so you may have covered this already. But my question is related to zoning and the future purpose of the property if it was sold again. So before the market moved in, I understand there was a developer interested in the building that was looking at a Starbucks or condos. I don't know if anybody remembers that era. But I didn't know if at that time there was just a verbal commitment to keep that building as a market, or if we have a zoning, a legal piece of paper that says that that building will always be a market. So as it is right now with the co-op, we know it's going to be a grocery store. But if the building is sold,
You lose control.
you lose control.
Correct.
Okay.
And so to get into more specifics on that, we have not completed a title search yet as to what the zoning requirements are, but I understand that there are no specific easements or restrictions as of now on the property. So if you sell to Mr. Singh or to any third party, you lose control. All right, let me jump to the other options, and I don't want to cut off questions because I was told I'd get a lot, and they were right. Okay, so option 2, we called it the shares. They called it the shares owner group proposal was their name, so we called it SAW. And I have listed in this the 6 investors who have stepped forward with the proposal to try to solve the problems. And I put their names on the list in full disclosure to everyone. And I will tell you that this option has not been fully vetted yet because it just came in over the weekend. But here is what they have proposed. And that is an initial capital investment of $86,000. Now, I clarified, is that a loan or a capital infusion? And they have made it clear it is a capital infusion. So $86,000 from the inception, and then they're willing to commit an additional $114,000 of capital infusion to operate as a grocery store for the short term. Okay, what's the short term? 60 to 90 days. Okay? If we go down option 2, it's going to involve me working a deal with NCB, SCC, Bergstein, and the creditors. And so I am in constant communication with the lawyer for NCB. I'm involved in multiple cases with him. I talked to him today. And just like everything else, make a proposal. Okay? But the idea would be we would go to them and ask for a 90-day forbearance. We would agree to service their regular debt going forward starting in December and service their debt for 60 to 90 days, which will allow this group to put together a management plan and operation to move forward. And I will let them talk more about their intent to raise money and how they hope to turn the market around, because you saw the numbers as the market is, didn't work in the past. Hopefully one of these two could turn it around. Their business plan is on the link on the meeting notice that you received. You're welcome to review the business plan prior to your vote. If we do proceed down this course of action, my understanding is it would stay in the co-op and that they're going to come in and turn it around, inject some funds in order to allow it to move forward. The benefit is it stays a co-op. The issue is one of the finances, but the other big concern is, as a co-op, if we don't do an asset sale, we still have Laurel Foods, which is a debt of the co-op of $1 million. and we have another couple $100,000 in accounts payable. We still have all the loans that we have to deal with, so there's still a substantial amount of debt that's going to hang over the co-op. Now, I'm a financial lawyer. I make deals every day. And the leverage to make deals is the threat of a bankruptcy. In a Chapter 11, unsecured creditors receive normally somewhere between 1 and 5 cents on the dollar. And so, if you go down this path, then we negotiate forbearances with the 3 secured lenders, and then we go to the other parties and we negotiate haircuts and try to reduce the liabilities so that this thing can move forward. The debt service right now is massive. If you're wondering why this failed, let me just give you some numbers. Your first mortgage payment to NCD, $20,532 a month. Your second mortgage payment to Shared Capital, $16,819 a month. So your bleed rate on just the 2 mortgages is almost $40,000 a month. Okay, so let's take a look back and see our sales in the month of August were $118,000, and your cost your total sales were $462. Your cost of goods sold was $363. So you netted $98,000. Your mortgage debt service is $40. It doesn't work. I'm pretty blunt and straightforward if you haven't figured that out. So option 2 is to authorize the board to enter into I haven't even thought through the process yet of how we would do this, but they're willing to come in and put money in. I've made it clear, and they've made it clear back that they understand that they're putting this money in knowing that they're not likely to ever get it back. I will let them speak for themselves as to why their heart is into this and what they hope to accomplish and how they think they can make their plan work. Okay, the third option, close the market. All right, we were close to doing this already. We can close the doors. We call the secured lenders, tell them to come get your collateral. The banks are going to file foreclosure. We probably won't defend. Perhaps we'll just deed it back to them, but nobody wants to deed back because they have to clear title. So they would go through the foreclosure process and sell the building at auction starting at 2/3 of the appraised value. I think someone's going to come buy it, and I'm concerned at what they build there because they would be free to put in whatever they want. Yes?
If option 1 failed after 60 days, like they couldn't get all the financing or whatever, would option 3 would just move right into that, or?
Most likely.
Okay, so
here's what I truly believe. If you vote for option 2, and I don't want to speak for Mr. Singh, but I'm anticipating Mr. Singh's going to walk. If you vote for option 1, then I'm not sure option 2 works down the road later. So I think it's imperative that this group really thinks about their decision because I think this may be the final one. Yes?
Would you say that again a little bit more stretched out?
Okay, her question is if I could explain it a little more stretched out. So let me do my best. So we were talking about the different options and what would happen under each scenario. If you go with option 1, which is the Singh proposal, and Mr. Singh cannot close, then I think you're probably at option 3, because I don't know if 2 is going to be around. If you go with option 2, I truly believe Mr. Singh goes away, and if after this 60 days, after these investors have dumped in $200,000, if they can't come up with a business plan that works, I think we're at closing and foreclosing. I think that you're at option 3. So what I'm trying to say is I think it's imperative that you vote for the path you want and don't think, well, we'll try 2, and if 2 doesn't work, then we're going to go back to 1. I don't see that as your counsel to be a logical vote. I think you have to plan that we're going to go through a door and we're not going to be able to pick another door if it doesn't work. Yes?
Are there personal obligations for option 3 for owners and loaners or not?
No. And so let's talk about your rights as owners. This board may vote in the end for me to file bankruptcy for the co-op. There is no reason for it to file bankruptcy except for one, and that is taxes. And that is if the market closes down, everyone who invested money is going to want to be able to take it as a tax write-off as a bad debt. I will have to, we'll have to employ a CPA to, or maybe there's one in the room who can just tell us is, the legal question is the following. If you have a bankruptcy notice and you have invested $50,000, you can take that to the IRS saying, I invested this money, or I lent them money, they defaulted, here's the bankruptcy notice, and you get $50,000 of bad debt that you can use on your taxes to write off against your income. Now, there's a question as to whether you're limited to $3,000 a year, or whether you can take it as a one-time. Once again, talk to your accountant. But having a bankruptcy notice is your slam dunk that you can take this as a loss. Now, a letter from the board saying, thanks for investing, we aren't paying you, we're broke, we're shut down, may be just as good. If you don't have to file bankruptcy, please don't pay me to put you in a bankruptcy. But that would be a decision that this board will have to make probably, and if from a tax standpoint it benefits everyone in this room, I'd have to guess how it will go, but that'll be up to them. Yes?
So option 2, say that it succeeds, would protect the investments of the share owners and owners.
I don't, they'll have to answer that because option 2 is we'll invest some money and come up with a plan in 60 to 90 days. I don't know what that plan is. But
well, the plan is attached to the proposal, the business plan and updated plans. They're specific, and part of the intent was that it will protect the interests of the...
So the question is, under option 2, are your interests protected? We will let them address that question when they come forward. Bill?
Yeah. So you brought up the issue of if we go into bankruptcy, we can submit that so we can file for a loss with the IRS. What are our options under option 1 going back? If we sell the building and the co-op shuts down, are the loans gone? Is the opportunity to write them off as a loss with the IRS?
So my experience has been that a business closing and a letter saying the business is closed, you will not receive any payment on your investment is just about good enough with the IRS, but it is the IRS. So the board will consult with an accountant at some point if in fact we are going to close in order to find out what the best way is for all the members of the co-op to take their tax loss. But normally you can just advise them that we have closed, here's my letter, and give it to your accountant, and your accountant will take it as a bad debt. Yes?
So you characterized what you foresee to be the lenders, the creditors' reactions to number 1, but what would you anticipate their reactions, knowing what you know now, if you go to negotiate with them under
to the secured lenders under option 1, what do I think will happen under option 2? I think they'll love me in the beginning because part of the forbearance agreement is we're going to have to do some debt service. So of this money being invested, we are going to have to pay some money to the first and second mortgage holder to buy us time. Okay, it's all about money. You know, so if we ask them for 90 days, I'm guessing the first mortgage holder is going to say, no problem, we'll give you 90 days. Just pay us 20 grand a month for the next 90 days and then see what you can work out. I certainly will try to do less, but they may even be in the room, so.
In that case, all that money is going to creditors and not to run the store.
Well, that's the case. Yes, some of the money is going to have to go to the 2 senior lenders to keep it open while they work on their management plan. Yes?
The covenants within both the mortgage and the second mortgage that we have failed already, some of those covenants, that have shifted the interest rate up, that causes that $1,000 and $10,000 payments, where they originally 15 and 7, that because we are in bad shape, we're paying 9% interest.
So the question is, since you are in default on some of the covenants, hasn't it adjusted the interest rate? And it's what's called a default interest rate. And the answer is, we have blown pretty much every covenant. So they could have triggered them early. We just received the notice from the second 3 weeks ago that they're kicking in default interest rate, but everything's negotiable. So if we're going to work a deal with them, we aren't paying them default interest rate. And we're going to ask them to take a haircut. Yes?
So on option 2, I just want clarification.
Sure.
The way this reads versus what I read in the links, it says initial capital, the capital increase is 86, and then commit additional 114. So in the documents, they're looking for the 114. So they have 86, and they're still trying to raise the 114. So we don't have 200,000 in option 2, correct?
I've been told there's 86,000 on the table.
Okay.
That's why I tried to word it that way. So I will let them talk more about it. But yes, you're right. You're telling me my understanding. Yes.
I know it curtails the discussion, but I have disruptors here with me. I was wondering if the 7:30-ish opportunity to vote would still be available.
I think it's open. Is voting open? Yeah. He's going back.
Can the poll workers, I know you want to hear this, but if the poll workers can go back to the back room, for those of you who need to vote now, want to vote now, you're welcome to, and we will continue discussion for nearly as long as there are questions.
Go ahead.
If we wind up one way or the other in option 3 with a closed market.
Yep.
And it goes up for auction at 2/3 appraised value, will that be at 2/3 of the $2.5 million current appraisal, or will there be another appraisal likely lower because it's an empty building?
So the question is, if it goes up for foreclosure sale, 2/3 of the appraised value, will it be from our appraisal, or will it be from some other one? And the answer is it'll be from some other one, because the law requires that 3 different appraisers be sent out by the sheriff's office. Those 3 submit their offer, and they take the average. So it is up in the air. If it's vacant, it's a problem. Now, I will tell you, my experience with vacant buildings is not a good story to tell.
So
And
it
that
would
is,
be a much lower value and would open it up to potential developers that we may or may not want.
that's correct. Now, I think that there'll be some bidding on this. I mean, I personally believe that this is a great area and it's a good property, and some developer is going to want it, but they're all looking for a deal. And that's why the board has not authorized me yet to go talk to these developers who would build student housing or put something else in there, because that isn't what this board wants. Those are my directions. I don't want to say what they want. Yes?
I'd like to know if Mr. Singh is successful in purchasing the building and the store, if there are any contingencies in the contract that it remain a grocery store under his ownership for X amount of time. Other than that, he could probably just go and sell it and make a profit within
argument's been made on any deed restriction because it certainly would deplete the value of the property from the 2.5. So, do you want me to answer more questions, or would you like me to handle it? Okay. All right, so I think I'm going to have the Peter Block, the SAW contingency, speak first about where they are and what their plans are for the market, and then we'll hear from Mr. Singh, and then I will come back and answer any further questions.
Thank you.
My name is Peter Block. So I got in this for a reason, and the reason was to try to hold the co-op and the communal land in the market. We got to 86,000. We haven't asked anybody for anything. This just came up, okay, for those of us that had the idea. I didn't feel we could ask anybody for anything unless we had some support from you. Otherwise, we're saying we don't have it. So we got in late, the board, we talked, and so this got up there. And so really, I feel you are deciding whether you care enough about keeping this market under our control. And I want to say that God bless the Singhs for what you've done, for taking this over, for keeping it alive, and I'm totally supportive of what you're doing. And so I just want to be clear about that. Option 2 is a high-risk venture. And the question is, can we run the market differently to make it profitable? And do we as owners, want to put more money into this possibility? And that money is not going to be a very solid investment. It's going to be more like a gift. And does it matter enough to us to make this? We all give money to lots of different places. And the chances of the loan coming back seems pretty slim right now because the performance has been so vulnerable. And so I felt that I want to say that the option 2 is you deciding. If you decide this market under our control really matters to you, that you will help in raising, getting the first 116 to 200,000, and then raising longer-term money to buy the building. And we have to do it quickly. If you are up for that risk and helping with that, then option 2 is viable. But that's the conditions, and I don't want to pretend there's any more secure than it is. And so that's how I view it. Some of that money's mine, and I said, well, I give money lots of places in the city. Why not give it down the street to maintain a communal ownership and control of this property? And take a shot that we can create a market that's popular. And up to now, it's been hard, but now John Fearling is the person who's willing to take on the task of implementing a plan. But I wanted to, there's any questions about the financial part, just while I'm here. So that's kind of, yeah.
Peter.
Yes.
You say under our ownership,
Co-op.
your plan, whose plan is driving option number 2? And let me mention, we already gave lots of money, and I personally went around and got lots of money, and we've waited 2 years for this plan, which is now just being tweaked a little bit. It's the same old, same old. Why do you want more money when you had 2 years to work up the exact same plan? A little lighter maybe, a little not so exact, but why on earth would you want to repeat history?
That's a fair question. Now, what John will explain is the plan that we invested in some ways, was never fully implemented. And that's the idea. Now, with the grocery was run. Now, let John talk about what will be different. So the question is, will anything be different now? If nothing's different in the operation of the store, then option 1 seems like a good deal. All right, and I feel that way. But I want to let John describe what will be different. If I can do that, because that's his business. I'm not a grocer, I'm not a financier. Yeah. So John, you want to come up here? Yeah, please.
A couple questions here. My question is the plan. I clicked on the link, and then I went to a meeting, and then they told me to click on the link again, and all I'm seeing is the 2015 plan. And I'm listening to you, and I want to make sure I'm clear so I can vote the way I want to.
That's why we wanted John here to talk about our thinking
Well, I asked
today.
John, he said he's never seen any of the financials. So that's why I need to talk to you. I talked to John about that yesterday.
Right.
He hadn't seen Dan share the financials with him at that point.
Right.
Are we still talking about the 2015 plan? And it's just a question of whether or not it was implemented correctly. We're not talking about a different plan. Am I correct in understanding that?
By plan, do you mean the sales per week?
I mean the link that you sent to click on.
I know. That's why we wanted John to talk tonight, because that's not self-explanatory. I agree with you.
No, it's a simple question.
That's the heart of the plan. But let John talk to that, because I got the question. Is there somebody else that wanted to?
There was a lady that had a question for John.
Quickly, for me, I've been hearing all along that shareholders have not been shopping there. And I would just, as we look around this room, I think if all of us are spending $50 a week, it might look a little different. Are we going to spend more than $50 a week there, everyone in this room? Because if not, none of these ideas matter.
Thank you. I think that's another way to frame it. Are we willing to recommit ourselves to making this work, which means whatever that is. Now, let me ask John to talk.
Good evening. The Clifton market, when it opened with a lot of fanfare, I think the sales were about $160,000 per week at that time, which is below the estimates that Keith Wicks had put together with his 2015 proposal. But something has happened, and it happened very quickly, that sales started to drop. The secret is finding out why that happened. All of these people in this room is a significant amount of shopping, and I would imagine that most of you have dropped your shopping patterns and gone other places for reasons. Obviously, the shelf conditions now are very bad, but part of the proposal is to get an influx of cash, and that can be built up. Some of that has already started with Mr. Singh. But I think that there's a more important thing. People in this room are probably expecting more of a co-op, more of an uptrend type of market. And I believe that the grocery product mix probably didn't fit that bill. Looked more like an IGA store, which worked for a long time, but times have changed. I think that putting the correct mix of product in the store and getting input from all the people like you that have ideas on what you want in the store, that is the imperative to get this information, because that's the only reason you would come back. If you feel that your shopping pattern at Clifton Market is going to pretty much satisfy what you want, for the most part, then you will continue to come back. If you don't, then you're going to go to Kroger or Meijer or wherever it is to get the majority of your product, and or to finish your shopping, and you'll just shop there like what's happening now. So getting feedback from customers, I think, is imperative to a success for this store. Building the product to be a more uptrend, a Fresh Market, Whole Foods type of store is the desire that we have, is based upon having enough money to buy this inventory. It's more expensive, obviously, but we have to stair step that to get. That's not going to happen overnight, but with more involvement with customers, I believe that can happen. This store, by reviews from outside agencies, basically said that there were not very many end caps, which are the displays at the end of the aisles, that were timely, that those particular places are where you get a high turnover of product very quickly. So just sit and hold old inventory, old and tired. That has to be changed all the time. The staff at the store needs to be driven into them that this is a co-op. These are people that have a lot of investment in the store. They want to be treated like a friend, not just as a customer. First names, how are you doing, not just what do you want. I think everybody enjoys that. You've got Clifton as a tight-knit community. People come in the store, they know each other. It would be nice to have the staff treat you the same way. There are very strong departments in the store. Produce and meat departments seem to be very strong. I've been in the store a few times recently. Haven't been for a number of years, but when this proposal came out, I checked, and everybody says that we've got some very strong departments. We have to reinforce those, and we also then have to build on and improve the ones that seem to be slacking. In the same vein, there are things that we can introduce as we go. None of this is going to happen immediately. For example, there's been suggestions on putting kiosks in the store where vendors may sell products that would be related to groceries and things that people in Clifton might want. There's a proposal or a suggestion that we get more involved with the growers of organic vegetables and stuff in and around the area. Winton Place seems to be a hotbed of all of this. There's no reason why we can't do that. Now, I don't know what the history of it is, if there was discussions with organic growers and to have a farmer's market type of approach in the store. But if it hasn't been, it needs to be, because, again, that speaks to the upscale look of the store. So that's important. I think it's important that the store would use the social media that everybody is in tune to, Facebook and emails and stuff, so that anything that's promoted in the store is sent out to all the shareholders or anybody else that we have email addresses for. And when you get that information about new items coming in or new displays coming up, pictures of those things coming out on Facebook, then those items when you get that information, you share it. So that everybody that has a Facebook account, obviously, that goes to all of your friends as well.
Hey, John, can you wrap it up?
Okay.
Go to second.
That's about it. I'll cut it right there.
Okay.
So just what we're going to do is we're going to let Mr. Singh now present, and then we're going to ask the vote to stand up there to take questions. We just didn't want everyone to not hear Mr. Singh because people are starting to vote. So we're going to let Mr. Singh say his piece.
Good evening. Thank you for taking time out for your busy schedule to be here to take care of this community matter. My name is Gurmukh Singh, and my wife, Vinat Singh. We have been supporters of Clifton Market since its inception. She's on the board, we are shareholders. So to give a little bit of detail about my background, I moved to the United States in 1990 from India. And when I was 15 years old, I attended University of Cincinnati. We currently have a business in Clifton, a restaurant, Elephant Walk. So in the past, I have ran grocery stores, wholesale business, car wash, and I have a lot of business experience. I've been doing this for a long time. So we are here today to discuss Clifton Market and how we got involved in this. About a year ago, I was approached by the board members saying that Clifton Market is in need of working capital. Is it possible for you to buy the building and lease it back to Clifton Market so they can gain some working capital? stocks started again, and this time the market was in a really bad situation. It was in a really dire situation. So now the whole business and everything need to be safe for market to be here. So again, is there any way you can help? And I have said that all along, I have experience, I can help. If anything is needed, please reach out to me. So I did study the numbers and look at, see if you can make it work. So I decided to give it a go, and I talked to board members. I said, the time is the essence. We have to keep these doors open. Because if the market closes, it's never going to open back up as the market. This due to a lot of things Mr. Goering explained, everybody. If there's so many people out there, there'll be so many legal issues you have to clear to open it back up. So my goal was to keep it open so they have enough time to decide what they want to do. So what they told me is like the earliest they can do anything is November 17th because they have to go by their bylaws. So much notice has to be given to shareholders to hold a meeting. And then for some reason, the meeting was pushed back to today from the 17th. But in the meantime, the shelves are empty, the sales are bottomed out, there's nothing in the market. I mean, when I walked in last week, all the coolers were empty, there's no meat, they were just cleaning, pretty much like market is out of business. And it's so sad to see because I know so many of the people that work so hard to raise money to make that place work. So, then I decided, like, let me get in as a management contract. So I will put the stocks on the shelves, what's needed to keep the doors open until you guys decide what you want to do with the market. So they were, I think, considering there was another option to helping some other nonprofit organization wants to take over the building and use it for their use. So they were contemplating either going that way or let us take over the market. So I had faith in shareholders. I know the Clifton community, I know they want the store there. So I invested the money hoping and having faith in the shareholders that they're going to pick the market. It's not going to be the other nonprofit. So, so in the meantime, like this, the third option wasn't even in the plan. This just came about, I think, a couple of days ago. So, in my opinion, I think the market is served well if it's run by an owner-operator, because in this grocery store, the margins are so thin, and this really needs to be, the whole operation of the building needs to be closely monitored. Like the numbers, the management need to be held reliable for their part, and you have to have a community engagement, you have to connect with your guests, you have to connect with the customers, see what they need, what kind of service you can provide, so they keep coming back. So, and the other option now that's out there, that's a co-op all over again. I think when they first started that idea was they based it on projection. They did the study on the old Keller IGA numbers, and then they hired some agency, I think, to do the study, like what the projections would be. And I don't think the market ever came close to the projections. So they're going back with the same projections again. My offer is more than what I put on the table, because I do care for the people who lend money to the market. So I want to make sure that we make this market successful and give back, create a fund that if the market is profitable, we give back so much of the profits to that fund that the board can use to pay back the $1.4 million that's owed to the shareholders. Again, at the end, all I want to say is like, if I hadn't stepped in like 2 weeks ago, maybe today this would have been like a difference. We probably won't even be here talking about this. We all be thinking what's going to come in that place, the space that was formerly occupied by Clifton Market. It'd be just an empty building. So, we did that, but we are here. But now we are here to get, decide which way we want to take the market. With me, I think we will, I have studied the numbers, and I've been there for the last 2 weeks, and there's so much love and support for that place. It's unbelievable. The first day we got the trucks, there were 20 volunteers there to stock the shelves. And unheard of. Like, it's so much. People care for this place. So we'll keep a close eye on the market. We'll keep it within its numbers. We'll keep it profitable. We'll expand as the business grows. So we're not going to start with some numbers here. Well, the market is here. We'll grow from the bottom, and we'll give the shareholders a chance to get at least some of their investment back. Thank you. Yeah, so there's a big question about the financing. We made an offer that has been never formally accepted by the board because they can't accept it till the shareholders vote. So there's not a whole lot I can do until I have an accepted offer. So in the meantime, I have lined up the financing. I have my options 1, 2, 3. So as soon as if the vote goes in our favor, we'll have I promise you, I wouldn't have spent all this time and effort if I didn't have the financing. So financing is there. So we just need for you guys to decide which way you guys want to vote.
Mr. Singh, you mentioned a couple of things here that people will very much want. One is to keep a market open in Clifton. Another is to return money to the shareholders. Are those two things in your formal proposal to the board? And if not,
you know, it's like you have to be, careful, like because banks are owed so much money. So that after, if the vote is in our favor, we will make that option out there for shareholders to get part of the profit back. But the goal is to bring the store back to profitability. Because it needs a lot of time, a lot of hard work and effort to get there, and plus your support. So
it's not in your proposal?
No, it's not in your proposal.
Yes.
I'd like to know, can you tell me in terms of if you do continue as a market, how long do you think it's going to take you before you know whether you can make it successful or not? And if the hypothetical is key, sometimes things just happen. Would you then sell the building, or would you try to figure out another use for the building?
Thank you for that. I mean, we will. I already know that it's going to be a successful store because I've already been there 2 weeks and I see the love and the support. We just got to provide what community needs, keep the expenses under control, and it's going to be a successful store. I have no other plan there but to keep it as a store. But, you never know what, some things are out of our control. There could be construction on Ludlow Avenue, something happens, and all of a sudden the market is not accessible. Then I want to give the board members, the community, a chance to get the building back, or they have the first right to get it back because they have tried so hard to preserve that historical look, that old look. So we don't want anybody just to come in there and do whatever they want to do. So board will have the first right to get it back. It's just in case.
So I can answer that further because this was a discussion I had with the board as we were vetting these potential proposals. And that is, someone asked me, well, can we have a option of first refusal to buy it back if he's not successful? And the response is, yeah, but who's got the money? I mean, we have no money. So yes, it's certainly something we could negotiate, but the co-op's got no money. So unless this group is willing to come up with $2 million and hold it reserved to buy it back, unfortunately, that's not there's nothing we can do with that.
You could put it in writing.
I like the way you're thinking because the board is thinking the same way, and so the board has similar concerns that you have, and that is we got to play the what-if game here because neither of these proposals, as you can see, are fully vetted or fully put together. The financing isn't completely there. So, I mean, we can sit and do positives and negatives of each. The board has the same concern. What if this doesn't work? I'm telling you that you lose control.
Well, we can put that in writing. I have no issue with that.
Great.
It's okay.
All around the room. So let's just go left to right. Go ahead.
How would your management style be different from what is in place now that would make it work?
I'm a hands-on person. My management, it's simple. You have to bring in more, your expense should never be more than what you're bringing in. So at whatever level, however you have to cut the costs, you have to keep the business in line with numbers. So you cannot, if I have to step in to do extra work, I'll do it. I'm there 12, 13 hours a day. So my goal is to keep the business profitable from day one. So we're not going to overspend. We're not going to hire things or do things that the business can't afford, and we'll grow as the business grows.
Over here.
Two words. Thank you.
You're welcome.
Can you elaborate on your experience handling grocery stores and what size did you handle in the past? How long?
Yeah, I ran a grocery store for about 10 years. It wasn't as big as this one. It was about 4,000 square feet, but I did a really high volume. But the concept is the same. Provide customers with what they're looking for, provide a good, nice, clean store, and people will come back.
Next, yes?
So see yourself a year from now, where do you see the market? Thinking that a revote would be achievable. What is in your mind's eye in terms of what I would see if I walked in a year from now? What would it look like?
Yeah, the market will be, it's like I said, I'm going to take the market to where people want to go. So I'm going to study your trends, what people are asking for. I can assure you the parking lot be nice and clean, the store be clean, it be fully stocked with a nice, friendly staff, and me being there every day.
Yes. Back to back.
It was touched upon earlier, but in terms of employees, what can we do to try and, what steps can we take to better the store?
Shop there. And support it and give your honest input, and whatever you need, we'll provide you. And just, I'm open to everyone.
Just right there in the middle.
Yeah, so I have a question.
Stand up.
I have two questions. One was, you mentioned that somehow private owners will be somehow better and run the store rather than a co-op. But what I would like to understand is there are many co-ops that are successful in the country. So how is it that those, like, do you have any insight into why this particular co-op has not worked out when other co-ops have worked out well?
It's not pretty much of buying a co-op. It's if I'm sitting on that side, I'll be asking the same question. It's for level to place. I'm part of Clifton. I've been here all my life. I supported the Clifton market. I want to save it for whatever way I can save it. And I have experience in this grocery business. And I think by just putting extra hard work, by being there, by monitoring it every day, by holding people accountable for what they're supposed to do, if the community support is there, it will be successful.
Yeah. So actually this question was for the other group that presented.
Peter Block.
So why do you think, like, what is your insight into why the co-op has not worked so far as compared to other co-ops that have worked?
We all have a theory. The question is, why didn't this co-op work? That's the question. Did I get the question right? And we all have a theory. We had a hard, tough opening. Was it too much burden? Was it too big? Was it not managed according to plan? This is kind of what we're saying. Everybody's theory, mostly, is a theory. And it's breaking all of our hearts that it didn't work. I don't feel I have a clear answer. I think I'm willing to make a bet that with John running and doing the plan that we originally pitched on, bet on, and then I don't want to even disagree with anything you're saying. But I think we maybe could buy this building. You know, we haven't made the ask yet, but I think we have the resources in this community to maintain control of the building. And that's kind of what's on my mind as it's driving it. Now, whether we can run this co-op in a different way than Mr. Singh can run it, you know, that's a risk we're taking. But there's a lot of issues that you know about with the co-op, I think, that kept it being run as tight as the businesses he's talking about. Anyway, that's my, yeah.
So the follow-up question was that this person that you're St. John, but the person who presented, we have some information about his background, but I have no idea that someone does.
About John's background?
Sorry, I don't know about that.
Good question, John. Why don't we take another question while he's kind of trying to remember his background? Yeah.
I'd actually like to make a statement rather than ask a question. Is it time to do that? Sure.
Yeah.
As a shareholder, I don't know whether I'm unique compared to a lot of you or not. I suspect not. My objective in buying a share was to help get a grocery store back into Clifton. I did not do it as an objective financially. I was never expecting to get the money back. Does it surprise me that we won't? I think option 2 feels to me the way it felt in October. Was it October of last year when we had this meeting in the Esquire? We were that close to going out of business then, and what has happened since is the hole got deeper and deeper and deeper. And that is the reason why, in my view, option 1 is the only viable option. Viable option because option 2 is not. It's the past. And option 1 gives Mr. Singh's wife an opportunity to run it without the debt that has been built up to the current suppliers. That goes away in this process. And as an owner-operator, I think he will have the commitment to make it happen if it can happen. It may not be possible immediately, but that's the best shot we've got. We're out of runway at the moment. That's my opinion.
Go ahead, sir. Yes, Mr. Singh. It's like we were in a crack game. And the first time we went around with the store, we cracked out. You know, and it all seems to be a gamble, but I'm glad Mr. Singh stepped forward and at least making some effort to make it better for the community and better for us. I was working there, but I'm laid off now, but I'm not worried about that. I want to keep the market open for other people, and I know people that work there. And they need this market in the community, and I give Mr. Singh and his wife, I commend them, and I vote for it. I vote for it. All right?
My main concern, because I used to work in the Clifton market, I have been with them since it went on before. Stand up. My point is, my main concern, when I gave the shareholder, I didn't expect to get my money back. I did it because I love Clifton. I moved here purposely to be in Clifton. I actually moved here to work at IGA, and when I got here, they were closed. So, grocery stores are my background. But I love Clifton Market. I would love to work here. But my main concern is management. We did not have good management. I'm sorry. I have to say it. I work there. I know some stuff going on. And I'm concerned if you take over the store, are you going to be running it?
Yes.
Are you going to be hiring the people that work in there?
I will evaluate everybody, and who is currently there, and the new hires will go through the screening process, of course, the drug testing, everything. Yeah, I will make the final decision.
It's like management communicating with everybody that's in that store.
Yes.
Got to do that.
Yes.
Just curious.
Yeah.
Over there.
Besides buying there and going to the store, what else could we do to help you?
This, Clifton, this whole thing has taken such a negative, there's nothing, not too many good things has been said about this market since it's opened. So I think it's about time to put a lid to that and let's support it. You know, it's a community base. You're still going to have, we're part of this community. We're trying to save it because we love it, we care for it. If it was for some business opportunities, there's so many business, so many stores closing all over the place that I can take over any other store. I'm here because I love Clifton. I support the market. I want it to survive. So let's stop all the negative things about whatever's been in the past and support it. Shop there. Tell your friends, tell your family that it's back. We have everything that you need. And come see me, talk to me up there all day, which way I can improve. So, whatever is needed from our part, we'll do.
In the middle?
We let John.
Yeah, sorry.
So you've run
Wait, go ahead after this question. Go ahead.
You've run a grocery store, as you said before.
Yes, sir.
And all the optimism, the love, and all of that we talked about is great. But anybody will tell you this store is a third larger than a neighborhood store would be with half the population that it actually has an attachment and 2 grocery stores within a mile. That equation doesn't work. So there can be a lot of wealth in the community, but there's only so much you can eat. That doesn't change the equation. It's a very simple mathematical problem. We can all have our theories around it, but a 22,000 square foot store is a non-starter for a neighborhood.
If you look back at the history of the store, it has done really well historically. It's been a store for a long time. We're going to evaluate everything, but I looked at the numbers that it was doing just a couple months back. Even looking at the numbers, you can make it work. You just have to stay within your means and try to grow the business as community asks. I think we can find our niche. I mean, grocery stores are everywhere, but some are doing well than the others. So you just have to provide and create the community connection and make people feel proud of. Create a store that gives back to the community. That's,
We're going to do this for 10 more minutes, and then we're going to still hang around and answer questions. But John, we want to answer the prior question. That is, the question was, what is your experience in running a grocery store?
I owned and operated Keller's IGA for 40 years, from 1970 till 2011. I was a minority stockholder. I had 49% of the shares of stock, and my partner had 51. We worked together very well, but there were decisions made over a number of years that I lost my vote because I had 49% of the shares. There were some things that happened that were unfortunate. There were some things that happened as a perfect storm over the years. I could go into detail, but I won't bore you with it. But for 30 years of operating the store, it was successful. Things started to tank during the last 10 years. Like I said, a lot of it was out of our control. Some of it, some decisions made that probably shouldn't have been made. But that's my experience. That's what I've done most of my life from getting out of college to the present time. My feelings, and like Mr. Singh, I feel also that this is a viable store. It should be. It's not really rocket science. You try to put the best product on the shelf for what people want and have the employees there to service the customers and do it in a professional and friendly manner, and things will work out okay. Again, we can go into detail about what you need to do, but I think he and I are pretty much on the same as far as operating the grocery store. There are plenty of opportunities. Anything is open at this point because there's so much improvement that could be done.
Right here.
So, Mr. Singh, you've mentioned several times that one of the things the store needs to do is live within its means. A good point that was made earlier is that none of these plans are going to work out unless all of us shop more at Clifton Market. How do you more people to shop in the store. And if we can't get people to spend the $50 that they need to spend each week for the store to remain viable under the original plans, what gets cut? Mr. Singh?
I think that this being engaged with the community, trying to get the kids involved, have, I have thought about offering cooking classes to little kids and have a community center in the basement. There's a whole lot of room that community could feel like they're part of this store. And I think a while back, if you remember, like Kroger's, for example, they dominate this market, and they didn't have this reward program. And once that came about, they kind of like just took over the whole thing. So we have the shareholders, and they have the cards, and they scan it and they shop there. But we need to give them something back, reward them back with something by supporting the store, whether that's a rebate or cash back, or we partner up with some gas company that they can get a rebate on their money out of gas. So we'll look at all the options that people are rewarded for shopping.
John?
This group is very involved in Clifton market, obviously. It's time to tap all the resources that we have here. Everybody has ideas on what will work and what didn't work. You had mentioned that the store was mismanaged. It would be nice to know on what points that's based, because once you know what didn't work or what was wrong, it's easier to make changes to a more positive thing. So again, there's nothing that's off the table. I'm not sure how online ordering worked, if it was ever available with the market, but if it hasn't been, it should be. That's the trend. So that's just another item. It's endless what can be done if you just put your mind to it.
In the back?
Hi. Sort of a question, sort of a statement.
Yes. Well, option 2 is they're going to infuse cash and come up with a proposal and plan to move forward. During that time, the market will be open. They're going to have to fund payroll, and part of funding payroll is to make sure all the trust fund taxes stay paid.
But at some point, they can't do that because the board step in and shut it down.
The plan, if we're going to proceed down this, there would probably be a management agreement somewhat similar to what we have with Mr. Singh, but it would be more binding than that, and it would provide that if those are not paid, that the store closes. That would absolutely be a default term. Red jacket.
I have two related questions to Mr. Singh. One is you mentioned, this is first that you mentioned that you would have to start working with the store to get the supplies back up. I think that people, if they come back in a month and the store is only you take over, it's only maybe 2/3 filled now instead of half filled, people are going to shop for once and not come back. So my related question is how much cash are you willing to put into above and beyond buying the building? Are you willing to raise or borrow to put into the store to make it a first-rate start? You have a good opening, and so you can not lose customers.
Yeah, I think we are working on that, but at the same time, you have to learn from the past and kind of like avoid the mistakes that were made in the past. So we kind of like have to regroup and study and see what worked there and what will work, and store will be fully stocked. And we just don't want to go all out and put stuff on the shelf that's not going to move, and that will sit there and then becomes a burden. So that part needs to be figured out, and we'll have a grand opening. And
do you have a number of the amount of cash that you're willing to put into the store above and beyond the amount?
a store that size, it needs about $500,000 to stock. So we have that number.
Yes, sitting down.
Mr. Singh, the option 2 people have talked about an upmarket concept. Where do you see this store under your leadership? Where does it fall in the marketplace?
I think the store, you have to see what demographics change with time, and Clifton has changed over time. So you have to support the community. We have to keep that upscale look, but also provide everything for all the cultures that are there. We want to add some international groceries. There's a lot of diverse crowd in Clifton. So it will stay, at the same time, want to give people that are looking for more organic food to make sure they have their options. So it'll be a mixed store with all the options for everybody to shop there.
Yes?
I just want to say that having served 2 years on the board and worked diligently to get to this day, that we have hemorrhaged blood since the day, literally the first 2 months that we opened the store last year, and it's really an insult to find out that option 2 arrived at this last moment without even a fully fleshed out plan, as if to say, wait a second, I just figured out how I'm going to do this when I had 2 years to already try to run this.
Yes?
I would say definitely go for mini jungle gyms. I've been very displeased with the product mix. You go in, there's like 15 different kinds of low-end vinegar. Why?
Yeah, you're so right. I think we have to learn from those mistakes that were made. You want the convenience person to go there and find what they're looking for, but you don't need 20 size mustards and 15 vinegars and
One more question. Who's the last? Right here.
Well, whatever option 1 or 2 happen, I've been working with communication with the customers, and I'm going to continue to work with customer relations, making sure that their emails get answered, their suggestions get answered, and you can always ask me a question when I'm broadcasting live. So, thank you.
Thank you, Tom.
All right. So look, we'll all stay up here for a little bit. If you have questions, please feel free to come and ask them. But other than that, I think as a group, we're going to let you vote.
Absolutely.